Welcome back, everyone. Earnings season rolls on, and I've got Kasey back with me today. She was missing the last two videos to get some work done on charts on our upcoming semiconductor equipment index, stock index. But Kasey's back for this one. I was surprised. We took some polls on here on YouTube as well as on Twitter on what companies everyone wanted earnings coverage of. And I was surprised. Top two winners, ST Microelectronics. I suspect it's because it's a Tesla supplier. And then Cadence Design Systems. Kasey, which one are we doing today?
Yeah, the first company we're going to cover today is Cadence Design Systems. And this company specializes in that EDA software or electronic design automation. And that process they use for semiconductor design, system design, and AI and data analytics design for all kinds of things. It includes integrated circuits, printed circuit boards, and other electronic systems. So really interesting company. And this electronic automation design is the process of using this software and hardware to automate the design, analysis, and verification of these electronic systems. And so the goal of this company is to improve the efficiency and accuracy of the design process, which is super important for profitability for all these other semiconductor companies. So really cool company that we're covering today in Cadence Design Systems.
Of course, one of your favorites that you wanted me to buy more of early this year and late last year. And of course, it's up over 30% year to date. So good call. Shame on me. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support as subscribing to the channel helps us continue putting out content like this. At any rate, so let's maybe actually throw up the semiconductor industry flowchart here, because I think it's important to understand where Cadence falls in this, because really, if you think of semiconductors, the industry overall as just simply an engineering and manufacturing industry. It's a very old technology industry, but it's an interesting one in that for centuries, it sort of is this virtuous cycle where you use technology to increase your manufacturing technology, your efficiency, create more precision products, and then you use that technology to develop even more precise and complex products. And so that's really what's going on with semiconductors. Cadence kind of completes that virtuous cycle where the software powered by chips helps create the next generation of even more powerful chips. So you can see that here in the flow chart, the software industry kind of flowing back into the chip industry via EDA software, of course, which Synopsys and Cadence are the two largest companies that have a stranglehold on this sort of entry point or re-entry point back into the chip industry. I'm just going to run through the first quarter numbers real quick, Kasey, and then you can talk some of the specific cool stuff happening with AI at the business. So first quarter 2023 revenue was up 13.3% year over year to just over $1 billion. Operating margin of 32% compared to 34% last year. On an adjusted basis, operating margin of 42%, down from 44% last year. Earnings per share up 4.7%, adjusted basis up 10%. A lot of noise going on from quarter to quarter. Some of it is related to the chip downturn, but overall, good stuff happening. For example, the company did ramp up production of their hardware business that's used for functional verification of chips. Cadence actually sells hardware in tandem with its software, about 15% of their revenue tied to hardware. But basically, as China has kind of reopened, they saw a nice uplift in their business there. In fact, China was 17% of total revenue, up from about 16% last year. And then on the full year outlook, though we did see some margin contraction, That's part of the noise, I think. Revenue is expected to be up about 14% this year, and then adjusted operating margins in a range of 41 to 42%, which is a nice jump from 40% adjusted operating margins last year. And the company will use about 50% of its free cash flow to repurchase stock. So a pretty shareholder-friendly software business here.
Okay, thanks, Nick, for going over the numbers there. There was a few interesting points that the CEO, Anirudh Devgan, mentioned. He said that almost any chip design in the world uses some form of Cadence software. I mean, obviously, this company is very central, as you mentioned, and you can see that based on the semiconductor industry flowchart. And they have a very diverse portfolio of analog chips, digital chips, memory chips, and then they also have the systems part of the company as well. And that's where he said that's where they're seeing most of the growth. They expected the business, the systems business would add up to about 8 billion to 10 billion of total addressable market in addition to the EDA market. So can you explain that a little bit? What's the difference between this core business of the EDA software and designing chips and versus the systems business?
Yeah, I think that's a really important thing to understand. And I think it's why we pointed this out late last year when we highlighted Cadence and its peer Synopsys as a top way to play the AI boom, which, of course, when we made that video, that was kind of as ChatGPT was going viral, and it just kind of continued to blow up from there. There's a number of components to Cadence's business. So they have an IP business. Basically, that's kind of like ARM holding. They have chip designs that they license. That's about 11-12% of their revenue. I already mentioned the actual hardware that they sell. So it might be like a circuit board or a hardware verification set that a company will make use to make a little mini circuit, and they'll test it and check it for any flaws and any bugs in the system. And then, of course, companies use it for EDA, electronic design automation. Think of this as like AutoCAD, but for chips. And then, as you mentioned, the systems designers, that could be like Microsoft Azure. It could be Amazon AWS, or a company that makes the servers that go into those data centers, or that a business installs in its own on-prem data centers. That's, like you said, where most of the growth is coming from. This is actually approaching now half of Cadence's revenue. In fact, I think it's also going to be approaching half of Synopsys's revenue if the general trend holds. And the CEO, Cadence CEO, said that this business actually grew 27% year over year in Q1. So again, like you mentioned, this is where most of the growth is coming from these days. These systems, as they get implemented to do things like, handle AI workloads, becoming increasingly complicated. Testing them before they get installed is absolutely critical. And so this is why we like Cadence as a play on the AI industry.
This is a chart that we've used before in our last video with Cadence and Synopsys. Cadence, the system design and analysis you see is only 12% in this pie chart. This is representative of the report for last year, the end of 2022, fiscal year 2022. But as Nick was saying, these system designed can use other components of the pie here, the digital IC design, functional verification. Some of those aspects are used in the system design. This is why system design is approaching almost 50% of the total revenue for Cadence Design.
Further emphasize why that is. The pie chart, system design software. So that's software specifically used to test the total computing system once it's put together. It's only 12%, but the system designers themselves are still accounting for approaching half. And maybe just a simple way to illustrate this is like, let's take Amazon AWS. AWS actually designs some of their own chips in-house. They design some of their own server products in-house. And then, of course, they then put all those things together in their data centers. So they're using maybe the IP chip licensing business, they're using the IC design software, then they're also using the systems design software. Cadence provides all of that. And so while system design is only 12% of the total revenue, a system designer like AWS might account for upwards of half of Cadence's actual revenue. So uh, this is an interesting historical uh, play on the semiconductor industry, but you can see how Cadence is really growing in importance as chips proliferate throughout the entire economy.
Let's move on to AI. There's obviously a lot of opportunity to help the customer design chips for AI, but also Cadence Design Systems is going to use AI to help design. I mentioned that currently chips are the most advanced chips have about 100 billion transistors right now. But by 2030, they expect that to be 1 trillion transistors. So obviously more and more complicated to design.
Yeah, that's correct. So they have a number of different AI software products that help speed up the design of chips, the design of systems, and help increase efficiency. And uh, total buzzword right now, but uh, generative AI, again, think like ChatGPT. This has actually been around for a while, but now everyone's talking about it. You can't not mention it if you're a CEO or CFO on an earnings call. So Anirudh Devgan mentioned this again on the earnings call. Cadence has some generative AI products that help speed up the design of chips. It is impressive though when you think about it. You mentioned like that 10x increase in transistors on a 1 inch by 1 inch chip in the coming years. Obviously, the complexity is just mushrooming. He mentioned just a couple of little stats here. One customer was realizing a 6x improvement in debug productivity because of using some AI products. And another little interesting stat provided again on the generative AI front using Cadence software. Devgan said that using some of their AI software provides an average of 3x increase in productivity for customers that are actually designing complex analog chips. So, just a couple of interesting little stats from the earnings call. Obviously, Cadence growing thanks to AI systems, but also a user of AI itself in its software stack.
You can see this illustrated really well in these next two slides here that will show the drivers of convergence in computational software. All of these things work together to increase the power of semiconductors and the software that are designing them with IP and chip EDA, the system design, AI. We have another slide that illustrates that Cadence Design Systems can be used for much more than just software and computer design. They acquired OpenEye Scientific last year, so this technology can extend even into the healthcare and medical field.
You noticed actually Cadence popped up on the McLaren Formula One sports cars. So a computing system can actually extend into a vehicle. So Cadence, a technology partner for McLaren, unfortunately, uh, only 3 races into the F1 season, but McLaren's in 5th place. Maybe Cadence will help them move up the field as the season goes on. Another interesting one, a system can also be a venue. So just last week, Cadence signed a technology agreement with the San Francisco 49ers. They'll be using Cadence Software's digital twins solution on Levi's Stadium in San Jose, California, to help with figuring out how to increase energy efficiency for the football team when the football team is playing, when there's other events, live concerts and whatnot. A company like Cadence can kind of, I think, just reach its tendrils further into the economy and basically everything is becoming a computing system. So the company's software can extend very, very deep into the economy in the coming years.
So everything we've considered thus far sounds like Cadence Design Systems is pretty much perfect. So what are some of the risks? Because I know the stock isn't completely perfect.
I would categorize the risks into three buckets. I think the most obvious one is valuation, and the company is already churning out some pretty high operating margins. Again, like mentioned earlier, expected 42% adjusted operating margin this year. I don't think there is a great deal of opportunity for margin expansion. Maybe just a little bit, but not a huge amount. So the valuation is quite rich at this point, approaching 70 times trailing 12-month earnings, over 50 times trailing 12-month free cash flow. It's a similar story when you consider Cadence's primary competitor, Synopsys. Synopsys is actually the largest business in the EDA space. You also have Siemens. They own Mentor. That's kind of the third dominant player. There's also some more specific software providers. Keysight provides some software in this space, as well as ANSYS. They do more on the physics simulation software front. Nevertheless, a bit of competition, though this is an oligopoly, more or less. I think valuation is a serious concern because it's quite rich. Second risk here is execution of integrating acquisitions. You mentioned OpenEye that they acquired last year. Cadence is a fairly acquisitive company. They're fairly frequently buying a smaller peer and bolting it onto their existing operations. That is, I think we don't mind this too much in the software market because these are IP heavy businesses. I think it's pretty efficient to take a peer like that and seamlessly integrate it into the existing operation. And it makes sense to do so because you get some synergies from the sales and marketing team, some synergies from the existing IP portfolio. But nevertheless, as we saw in especially 2020 and 2021, integrations, even for software businesses, can go awry. So the pace of those acquisitions is something to keep an eye on. And then we also mentioned competitors, but I think we'll just say it one more time. I think the third major risk is competition, especially with software. There's a lower bar to entry for a software business versus a company that wants to say, manufacture chips. It's a pretty asset light business model to enter. The software side is. So I think that's one of the reasons why companies like Cadence are constantly making acquisitions of smaller peers. Part of it is to acquire new shiny tech. Some of it, though, is maybe to actually stave off future competition from some of those smaller peers. So I think that's the third potential risk.
So what do you think about where the stock is right now?
It was a pretty good quarter, pretty good outlook for 2023 from Cadence, but I think our outlook is unchanged from the last video we did a few months ago. I think if you were looking at the potential over the next 5 to 10 years, though there is a premium on the stock price right now, shares are fairly valued for the ultra long term. So I'm not going to provide a specific price target, but I will say this is one that we continue to have on our DCA, dollar cost average list. We buy we nibble each month on this one, and we nibble each month on Synopsys. It's a small position, a very, very small position in our portfolio, but after a year or two of DCAing into the stock, it will be a bigger portion of our portfolio by the time it's all said and done. And again, like I said, we're looking at the 5 to 10 year potential. So the valuation is most definitely a concern, but that's why we're buying a little bit, a little tiny bit every single month versus just taking a 1% or 2% position up front. We're going to build up to that 1 to 2% position over time.
Okay, that's a wrap for Cadence Design Systems. Stay tuned for ST Micro. We'll cover that earnings report as requested coming up later this week. Also, we'll link in the description the recent video on Cadence versus Synopsys so that you can watch that video as well. Make sure you hit the subscribe button. Don't forget to leave us a tip if you'd like in our coffee fund. So link is in the description for that. Everyone take care. We'll see you again soon.